The Federal Reserve wants us to lose money on stocks and crypto. Apple's brand new release coming out tonight. We killed it in the market yesterday, but a lot of amazing opportunities still to follow coming up right now. Good morning and welcome, guys. My name is Dane van der Mast. I am your host today on this beautiful Wednesday, the 7th of September. Guys, we have a jam-packed show. If you were live with us yesterday, we absolutely smashed US 30 live right in front of your eyes, did analysis, took the trades, moved stop losses into profit, and that resulted in a 3,000 pip move. So let's jump into it and let's get started. And I'm going to use the first couple seconds just to go over and show you what exactly ended up happening yesterday. And this is just a quick recap of obviously the events and the trade that we took. So I'm going to go ahead and share that with you as we quickly have a look at that together. So let's jump straight into it. The closer we go to the apex, the closer we get towards a decision. So markets are definitely selling, guys. Markets are selling. That's where she wants to be. And so that is a nice, healthy, strong push there, both from NASDAQ as well as US 30. And we've got those sells in place there. Stop losses already into profit. And look at that market push. Right, stop losses already in profit. That is the most important thing, is that you lock your stop losses into profit. So in my case, I've already got some trades up here stuck into profit. And as she continues to move down, look, ideally, you don't want to move into profit too quickly, right? For the reason being that markets could push back up and just take out your trade and you haven't made or lost any money, which is fine. But ultimately, you don't allow any space for that trade to breathe. So what we would want to do in most of these cases is you'd look at the move down. Let me open up US 30 a little bit bigger. In most cases, we would look at this move down, measure Fibonacci, right? We know that the maximum pullback is a 78.6, and that is generally where you'd want to put your stop losses if you want to take it a long-term trade. But as we can see here, we're in beautiful profits. Markets are pushing down, making really, really good money. And here we've been patient. We've taken the longer trade. All stop losses are now in profit, right? So we are now running. That is 600-700 pips in profit there on that quick move. So that's the beauty of indices. And I suppose that's why people love it, because you know the pip count is massive. And this is obviously one of the massive benefits of Globex's gearing when it comes to US 30. Every time you open a trade with Globex, Globex has got a 1-to-1 ratio on US 30 in terms of their contracts, right? Meaning that most of the brokers have got 1-to-100 contracts. So when you open it, there we go. So we absolutely smashed it. It was an amazing session. If you were part of that session, then yeah, just a massive, massive well done. Now, quickly moving into the news, guys, we don't have a ton happening in the world. We do have some local news saying, we may miss a recession. I think completely otherwise, right? As these ripple effects, as these tightening protocols, as things become more expensive and interest rates become more expensive around the world, those ripple effects happen in SA. The big issue that I feel analysts miss the point completely is that delay can happen up to a year later, right? If you look at the housing crash, if you look at the dot-com bubble, if you look at any past retraction in any other first world economy, it took about a year to hit us, right? So there is a definite ripple effect that happens, right? Up next is an pretty crazy article, and it might be sort of overplayed, but ultimately the Fed wants to see stock markets come down, right? The Fed wants to see, markets come back down, and ultimately has a knock-on effect into Bitcoin, right? And that is one of the things that they're looking to see. And I believe this article is maybe taken out of context, right? The Fed wants to see a little bit of a reduced growth to obviously help control inflation as they raise interest rates. So definitely an amazing article. I am going to link it down below. That will allow you to go ahead and watch that. But obviously the very big next item from a news perspective is that we do have the new Apple launch that is coming out tonight. Now, going back into the data, does this have a massive ripple effect on the price of Apple? Historical data says no. The initial launch, right, unless it's absolutely groundbreaking, unless they're essentially showing something that is an absolute game changer, this doesn't completely, boost Apple stock. We're not going to see, 5, 10, 20% gains in Apple stock. On average, we generally see about a percentage gain on the stock on the day of the relaunch. Now, this launch is happening at 7 p.m. tonight, GMT +2. I'm going to be awake for that. I did hear a little bit about load shedding that may be potentially happening. And depending on that, I may be streaming this live, and we may be watching Apple stock live, right, to try and see that correlation. But I will be sending a very interesting article that basically goes down in terms of, what is the effect on new product releases for Apple's stock, right? What does that mean historically when it comes to services, when it comes to stock splits? So a very interesting read for those of you who want to just get a little bit more into the individual stocks and assets that comprise of NASDAQ, Dow Jones, so on and so forth. So that's going to be very interesting for today. But in terms of the economic calendar, we don't have all too much. I think the item that is going to be of the highest importance is going to be the European Central Bank discussions, as well as GDP data for the euro based on Q2. So at this point in time, we had a previous GDP of 5.4. There's an expectation for a decrease, an expectation for a contraction on the European GDP. The gross domestic product is expected to decline. The big question here is by how much, right? Now, for those of you who know how to trade fundamental data, and for those of you who don't, I'm just going to give you a quick crash course. So the forecast is based on analysts. Analysts will look at all the data that's come together and say, listen, we expect, based on what is happening, that there should be, the GDP reading should be 3.9%. Now, how does this affect markets? That affects markets when the actual number is higher or lower than forecast and in relation to previous. So as an example, as a quick example here, should we get an actual figure of, let's say, a 3.6, a 3.5, a 3.4, right? That would be a shock to the euro, right? It would mean they missed expectation. The European situation is substantially worse than what they predicted, and that'll have a net negative effect on the euro. Now, I think that gives us a perfect storm, and that's a beautiful transition for us to move into our analysis. But really quickly, before we do that, just having a look at the S&P 500 heat map, we can see across the board on the S&P 500 that big tech was heavily affected. The only industries that generally looked to do fairly well was healthcare, as well as real estate, and then parts and parcel. Tesla did fairly well. Tesla is sitting in the automotive space, but I see them as a tech company, if I'm honest. All right. So yeah, let's, I think, jump straight into what we're busy looking at on the analysis side of things, because I think there's some very interesting things we can jump into and have a look at. So first and foremost, we are going to jump straight into the dollar index as always. Okay, now the dollar index, again, I think there is going to be massive opportunity here to obviously further see what is going to happen, because we still are getting that divergence, right? We're still getting a very clear divergence. We're getting higher highs here, lower lows on the RSI. So I'm expecting something big to happen in the dollar over the next week, right? And this could very well line up with the expectation of what we are going to be seeing in terms of Powell's announcement tomorrow evening, right? This could have a massive ripple effect on the dollar. But anyway, moving into currencies, and where I think the biggest opportunity lies, again, is going to come down to Euro USD, right? Euro USD is currently sitting in a very vulnerable position. And if we start to see that European, the ECB data and the GDP data for the euro come out under expectation, that is exactly what the euro cannot afford to have right now, because a negative data effect, a negative external fundamental event, adding on the pressure that is already there. The dollar's already dominating the euro. So if we get any negative data there, guys, then we are looking at a massive short on Euro USD. And this is already pushing at that 20-year low, right? So that's going to be absolutely massive. Now, moving on to indices, I'd like to obviously jump in and talk about what happened yesterday really quickly. And I still see a lot of opportunity for us. We're currently looking at the US 30, and on the US 30 we had that massive trade for yesterday. So here's our trade for yesterday. Massive move down, a temporary pullback, and then a continuation towards the downside. Now, this is why when people ask me about risk management, if a market moves, can you use a trailing stop? Of course, a trailing stop is going to guarantee you that you secure the most amount of profit before a pullback. However, should you want to get through a pullback and have the longer trade, this is where we need to obviously utilize Fibonacci and understand where could that pullback end. So let's do it quickly here together in terms of what that could end up looking like. So if we go ahead and draw that pullback, so market moved from there to there, and we can see that markets pulled all the way back up to the 78.6 and then continue that move down. So the total move for yesterday, as we sit right now, is 4,800 pips, right? Now, Euro USD, US 30, as well as German 30, pushed off of that level that we identified yesterday. But NASDAQ, I think, is going to potentially be one of the superstars of the show, right? And I'm quickly going to jump into this and show you what it is that I mean, because we've pushed down below that 61.8. We can clearly see that on NASDAQ. Now we're creating a new structure, and I think there's going to be a ton of opportunity for us to benefit this afternoon on the New York Stock Exchange Open, both on NASDAQ, both on US 30, as well as potentially looking at German 30 again this afternoon. ZAR, just quickly adding it into FX. As I said yesterday, we were looking for that pullback towards that 61.8. We didn't quite make it. ZAR is making an attempt towards the top side, not necessarily there. But again, correlating that with the dollar index's potential short that we might end up seeing, we obviously have that divergence right there on top. If that divergence plays out and the dollar loses value, we could see USD ZAR fall back to this ideal 61.8. The 61.8 is my ideal buy zone. This is where I'm monitoring to go long on USD ZAR. As I've explained in the past, I do see USD ZAR hitting that 19-20 rand to the dollar before the end of this year, meaning we only have another quarter left and things are about to get crazy. So USD ZAR is definitely on my watch list. Gold, guys, in terms of commodities, this is going to be a very, very hot trade. So I'm going to be paying close attention to gold in terms of what it's currently doing, but we are currently sitting square on that 61.8, right? Looking at that last move up there, people generally ask, why do I pull my fib levels the way I do? And I'm looking from the last natural swing low to swing high, the last swing low. So if we just look at that moment in time, right, we just draw out this whole thing here, you'll see that none of the levels that we're drawing correspond. And that is the beauty of Fibonacci, is that it will physically show you when you're drawing it wrong, right? Things just don't align, things don't match. But quickly having a look at gold, we can see we've pushed straight back down to that 61.8. As I said yesterday, that, we could be in a position where we try to range up, but we could also very well push back down. So we're currently sitting on that 61.8. Now, for me, a break below 61.8 and specifically a break below $1,684 to an ounce of gold is going to be that trigger to go short. Simply put, break below that 1,684 is going to be my trigger to get short. And all I'm going to be doing there is placing my stop loss above that 61.8. And if I wanted to be even safer, I would place my stop loss above that 50 fib level, right? 50 fib level does represent a fairly big pip count. But, if you want to take an investment grade position, then, we would draw out this market structure, place it above this diagonal resistance as well as the next fib level. All right, so quite simply and easily put. Looking at Bitcoin, guys, Bitcoin is pushing down to that 78.6 again. As I said, a lot of people in the past couple of weeks have been asking me, is Bitcoin ready to buy? The answer is no, right? Looking at where things are going, I definitely think Bitcoin has the potential to push down to that 88.2. The value proposition on Bitcoin is sitting in that $12,500, $13,000 to a coin. And that is where I see massive buy opportunities. And that is all where it's going to start to get a little bit crazy. So guys, a lot happening in the markets today. Please make sure you don't miss us live this afternoon. I will be live at 3:20. Come and trade with us. Come and ask questions, drop in the comments. If you have anything that you would like me to analyze, we are going to create a separate group just in order to chat, where you can ask questions, you can request analysis, you can ask for help, whatever it may end up being, but come and engage. These shows are for you. Being a proud client of Globex 360, that is what it is all about. And as always, please make sure, guys, go ahead and like this video, hit the bell notification, make sure you're subscribed, and go and have a look at all of our other social media resources. We're going to start to post a bunch of clips, a bunch of amazing things, and very soon our 360 Traders Academy is going to come through a whole new, fresh, revived, new look, new feel, new strategies. Everything that I use in order to trade, I teach step by step, whether it comes to Fibonacci, whether it comes to divergence, hidden versus normal, price action, market structures, everything you need to know, and so much more. It's been a beautiful session with you guys this morning, guys. As always, be safe, trade safe, and I'll see you guys a little bit later in the live session. Until then, much love and shalom.